Okay, well, we want to welcome everybody here. It's great to see you joining us for this webinar. Welcome to today's Gravitas Impact's Global Business Leader Forum. I'm Carter Heim. I'm CEO of Heim Lance, a CPA firm in Annapolis, Maryland. I've been CEO of that company for 25 years, basically when I started and gave myself the title. I'm a Gravitas Impact Senior Coach, been a CPA for over 40 years, and I live in Annapolis, Maryland on the US East Coast. So today's topic is top 10 reasons why every entrepreneur should have a CFO. And our speaker today is Dominick Bencivenga of the A-Team. He is president principal with the A-Team Consulting since 2013. He has 24 years in business as a fractional CFO, and I'm sure Dominick will tell us what that means in a few minutes, and 12 years of a corporate career at Citibank in their retail bank division. He's a born and bred New Yorker. He'll have to let us know whether he prefers the Mets or the Yankees, not sure which, but we'll find that out too. So, as I said, Dominick is the president of the A-Team. It's the A-Team Consulting, your accounting team from the boardroom to the back office. They've been in business for over 19 years, since 2001. Their office is in New York City in Midtown. They have a staff of 20 CFO. They have 4 CFOs, 4 controllers, and the rest are bookkeepers. And they work with over 100 active clients nationwide. So Dominick, with that, tell us about this. Why should every entrepreneur have a CFO?
Thank you, Carter. And I'll answer that first question. I am a lifelong Mets fan.
Okay, good.
So very happy to be here. Very pleased to be with the Gravitas community and take this topic from my expertise. As we discussed in our planning sessions about this, what I'd like to do today is walk through what are reasons I've seen of why you should have a CFO in general, and then why a fractional CFO makes sense for a lot of organizations. Today, Carter and everybody watching, when I say CFO, I also referring to a fractional CFO. They are interchangeable for the most part. We're looking at a situation where you need to have a chief financial officer, someone who's your most important finance manager, executive in your organization. And if you can't afford that person on a full-time budget, which can go anywhere depending upon the region and experience, from $150,000 to $300,000 for a small entrepreneurial business, you can bring someone on a part-time basis, which is what I've been doing for 24 years, where somebody has had my services on a day a week or 2-day a week basis, a day a month basis. So that's the way you get the expertise of someone with all those years of experience, and you bring it down into a very manageable budget.
So Dominick, if we could, before we continue, just because I forgot to say, so it's my fault, but we have the opportunity, as our participants have questions, please just post them right away. At the end, we will have a Q&A part, but also as we go along, if we can, we might work in some of the questions as we go. You're welcome to put them out there in the Q&A or in the chat. We will be watching both. So Dominick, I'm sorry, back to you.
So today's CFO, it's a very different role than it was, let's just say, even 20 years ago. Today's CFO is not your father's or your mother's CFO. They are in a very different space. A CFO today should be a partner in defining your business model. They should be executing that business model with you, not just controlling it. The control functions are just for that, for controllers. So there's a big difference between the person who's in the strategic CFO role and the controller. There's a little bit more on the debits and the credits and closing the book side, although ultimately the CFO is responsible for that. They should be looking at your business and looking at identifying your risks and opportunities, not just monitoring it, but thinking ahead for you. communicating a vision for you, driving significant cost reductions. And in today's world, if they're not intellectually curious about technology, I think they're at a deficit. There's so many different ways that technology is helping finance departments and businesses. And when you bring that together in this kind of role, what I see is the best CFOs, fractional or not, are a partner to the president, CEO, entrepreneur, a strategist, and an operational driver, just not a bean counter.
And Dominic, you and I had a little conversation about this. When I look at that list, that is very much in the present and in the future that you're counting on your CFO to help you with, right?
Correct.
It's using the past to inform, but it's informing action. And that's what you're looking for the CFO to, one of the things you're looking for your CFO to do for you.
Correct. So today, if you're sitting in your role as an entrepreneur and you've got someone giving you reports and only giving you reports of what happened in the past, then you're not necessarily getting the functions you can be getting from a CFO, because that person is just counting the beans and telling you what happened. Maybe they understand well what happened, but they're not informing you about what to do about it. And also to think ahead, Carter, as we also talked about, whether in your business that means a month or 3 months or 3 years. Particularly in the COVID crisis world, everybody's thinking ahead in much shorter terms, but still, you need to be thinking ahead next week, next month, next year.
Yes. Thank you.
So top 10 reasons. I broke this up a little like a David Letterman kind of list, if everybody remembers him. Reason number 10, a fractional CFO is an active partner in your business at the center of your business, impacting and interacting with your many stakeholders. You have a ton of stakeholders in your business. You have a management team. You may have partners, you have coaches, banks, your employees. Unfortunately, government agencies have a hand in your business, whether you like it or not. The IRS, your state agencies, your Department of Labor's. You need insurance and risk management. All these pieces are out there. And you might have all of these things, but in my mind, when I step into these roles, I am at the center of all those relationships, and I'm taking away the day-to-day activities and sometimes even the strategic thinking on a lot of this from the entrepreneur. So they can do, this is the line I use all the time with prospective clients, you go do what you do best. So Mr. or Mrs. Entrepreneur, are you really good at sales, design, being a doctor, being a lawyer, being an accountant? You go do what you do best, let the CFO go do what they do best, and that partnership is how I see this role and what I've been able to accomplish over 24 years of doing this.
And so Dominic, let's stick with that just for 1 minute.
Sure.
You talk about about maintaining the relationship somewhat with these various stakeholders. Why is it so important to the entrepreneur that these relationships be maintained? Because I've known many entrepreneurs, they think about their bank when they need something from their bank, right? They think about the government agency when the government agency comes knocking on the door or when they need something from the government agency. But what happens with the CFO in this role that you're telling us about when you have done this?
You're building up a lot of equity in those relationships over those years of doing this, so that the example of the present is perfect. When you're in these crises like we're in now, that equity you've built up in those banking relationships or the relationship you have with your partner, even your employees, those equity in those relationships will carry you through in this moment right now and get you some leverage you might need. I don't know what kind of leverage you might have needed in this crisis for any one of the businesses out there, but over the last 3 to 4 months, I have seen every one of my clients need something from one of these stakeholders, whether it be a PPP loan, or they need to extend the terms of their loans or lines of credit, or they needed to tell their employees, listen, you got to go to a 3-day work week for the next 3 months for us to survive. You can get that done when you've got these relationships built the way I'm suggesting you would do.
Thank you.
So a CFO and who comes in with the right role and attitude thinks differently than you or your staff. That's our role. We come at it from a different angle, the way your CPA does. But most importantly, we don't get attached emotionally to your business. This is particularly true with a part-time or a fractional CFO. I could look at things in very much of a black and white, provide a very objective review of your key decision points, often mediate opinions and differing opinions on your management team, and try to get down to this bottom line. And I don't live in a black and white world, but sometimes you have to make decisions that are black or white. I try to look at the grays, but sometimes you have to do that. So the other thing I brought up is if you're looking to bring someone in, these are the character traits I think you'd want in a CFO. You want calm and thoughtful. If your CFO is a really emotional kind of person who's just constantly full of this emotional internal energy and is constantly coming out on your team, they should be on the back. They're like when they're sitting in meetings, they say things very infrequently, but when they say something, it's really impactful. They should be authentic with you and your team. You should be able to talk to them, they should be able to talk to you. They should be brutally truthful about the facts. I think one of the things that does not happen enough with entrepreneurs is they get the brutal truth. And sometimes you have to have that truth. And then, you know, that groundedness, I think, is another part of what makes a good fractional and or full-time CFO. That they come at things and can offer perspective that it's very, very grounded, not only in the facts, but in the reality of what's going on in your business.
So you're looking for someone with some loyalty to your business, but who cares about the results, cares about the success, cares about achieving your goals, but is not emotional about it and does it in a way that lets you continue to, or that is reality based, as you said, that groundedness.
Correct.
Yep.
And I think that's what an entrepreneur needs most of all. When, you know, I look at it as a right-hand person, right? That it's a right-hand man. When I was in my corporate career, which was at Citibank, I played a role, 2 stints, probably all of 4 years together, the chief of staff. So finance was just part of that role, but being the chief of staff meant I was in the background at all those meetings. My immediate supervisor leader who was running our department was always up front saying it, just like the entrepreneur in the business should always be up front and be the leader. But I was in the background as the team member that they most relied upon, almost always. And I think that's how I see the CFO role. Someone who pays attention to all aspects of your financial picture is our number 8 reason, big issues and small. I think it's a great quote, a coach that I heard write it out in an email newsletter. The numbers don't tell the complete story. You need to understand what, who, and how the numbers are being driven. So I don't know how many people this would resonate with, but I would suspect quite a few. Sometimes you just see a report and it doesn't tell the story. You have extraordinary revenue for some reason in a particular period because it was a one-time non-recurring item, either an expense or a revenue. So I remember a story once, this was very early in my career, very, very seasoned. It was a blue-collar kind of business, really smart entrepreneur. And I walked in with a set of numbers someone on my staff put together, and he told me they were all wrong. And I said, what do you mean they're all wrong? He says, I know my business. I know what's going on. These aren't right. And sure enough, the bookkeeper had done something that was a little bit off that we had to go correct. But this business owner, he knew the what, how, and what was driving all of his numbers. And he's keeping it almost in his head. And he was telling me, if you're telling me I did $1 million last month, by example, I know it was 1.3 or 1.4 because this, and this. So I think that's an important point, that you need to have the CFO who is understanding those numbers and getting very aligned with how those numbers are being driven by your KPIs and your metrics. So you should have your KPIs and metrics. The Gravitas Impact Coaching process goes through all of that in your stages of agile growth. So you need to have that alignment. But more importantly, you need to have the CFO know who's driving that KPI metric. So he or she knows to go to that person and has a handle on if you're going to miss that metric, or maybe you're going to be above that metric. But that CFO is rarely ever surprised when the numbers come in, because when the numbers are coming in, they're seeing that the KPI was consistent. If the KPI is a good measurement of your results with what's going on with that driver, and you already knew from that person who's the key driver what's going on to move that needle by the. Number 7, CFO usually comes from outside your industry and brings a fresh management perspective. This is particularly true, I think, in the fractional CFO world. The number one question I get asked by a prospect is, have you worked in my industry in the past? And I say that's the wrong question. I think that your debits and credits and how you're going to do that, as accountants know, are roughly the same in just about every business, and there's probably a small part of every industry that has some unique accounting rules that you need to take into account. But what to know about the business and how to get a handle on what's going on inside your business and your industry is something anybody, a fractional or full-time CFO, doesn't pick up immediately. But once they understand what's going on in your business and brings in their own perspective from, in my case, 24 years of experience, someone else's case is 30, 15 years of experience, that will make a huge difference in your business. That new set of perspectives to help you see things that maybe you're just not seeing the same way.
Yeah, I think lots of times the question is more important than the answer. You know, essentially your CFO is sitting there as a catalyst at times to help the leadership really analyze something and consider different perspectives.
I agree. Number 6, a CFO is a voice of finance in your management team. The financial impact of every decision is reviewed. To the first bullet point, I've often been brought into management teams that have never had a finance view brought in. So you got the entrepreneur, he's got his sales and/or marketing person, distribution person, design person, a bunch of different technical skills, but they leave out their bookkeeper, or if that was their highest level person before I was hired, or even their controller, not part of my management team. And it almost always comes back to haunt them because they're not making every decision and giving every decision some sort of view from the CFO's standpoint. So CFOs are going to think differently. They're going to question differently. They're going to come to the table, as you just mentioned, Carter, with different kinds of questions. And we could take a very hard look at all sorts of spending and be unattached to the recommendations. And if we are in the part-time fractional role, we particularly won't come in with any sacred cows. There's nothing that's going to be, hey, we can't change that. And the last thing I like to say is, you very often can use me and/or your part-time CFO as a deflection, delay tactic. You don't want to make that decision with that employee. Maybe you don't want to tell them what you already know the answer is, which is no, that they don't want to hear. So you say, let me check with Dominick. Meaning, let me check with my CFO. Let me check with that person. Because now you can then just go and say, I did check with him and Dominick said, no, we can't do it. So now it's not you're the bad guy. You could also say, let me check with Dominick, and then have Dominick or your part-time CFO step in and actually go tell that person that. There's an amazing, I'm going to use the word here, I don't mean it intentionally, but it's just the perfect word. There's an amazing kind of gravitas that I get as the outside part-time CFO in many businesses, and the right entrepreneurs use it exactly like I'm telling you here, because you're making tough decisions all the time, and you know those decisions can very often get in the way of that relationship you have with your key executives or a key employee. So you're nodding your head, so I think you've seen it.
Yeah, well, I just saw it last week. One of our CEOs had to deliver, say no to a key employee, and did, and said that he reviewed it with me. And later, after that was done, the CEO wrote back to me and said, I love having you as the authority figure.
It's very true. It can be any trusted advisor. It
Yes.
can be the fractional CFO. It can be the accountant. It could be your lawyer too. I've seen people use their lawyers this way. But it's a good tactic, I think, that actually works, because very often you know your answer when they're talking to you, but you just don't want to be the one who's going to give them the disappointing news. Reason number 5. So we talked a little bit about in the one of the first slides about being proactive and building relationships. I don't think there's any bigger, better, more important relationship, especially when you're growing, than your banking and lending relationship. So the first reason the CFO has an important role here is we talk the same language. Just like we talk the same language with CPAs, we talk the same language with bankers. It helps in my case that I have also been a banker, but most CFOs have been through hundreds of kinds of packages with bank lines, term loans, asset-based lending. They've seen it all. They can understand what the banker's talking about, slim it down so the entrepreneur can understand what they're offering and what they're not offering. And also present your company in the best light, because sometimes bankers are very black and white in their underwriting, and other times they allow that gray, and that gray is in your relationship manageability to really sell their underwriting team on it. I've seen this happen many times, and if you could keep getting them pushing for you, that you get the most out of it. Lastly, by being exposed to many lenders, and I know lenders in all different types and ilks, you get a bird's eye view of all the trends that are out there. You start to see the different things that are going on in industries. And that's just something else you bring back as a CFO to the entrepreneur, and you bring back the fresh perspective, and you bring back in, because a lot of entrepreneurs and their teams tend to get very narrowly focused in their lane of their industry and only see it that way. And even sometimes smaller than that, my industry in my area of the country, or my industry in my little size of the business, but maybe the mid-size and the larger companies doing something that you need to know about.
Mm-hmm.
Number 4, the CFO is proactive in managing your cash flow, accounts receivable, et cetera, et cetera. Obviously, in current times, this is the most important thing that's going on for a lot of businesses, managing cash flow, talking about, burn rates used to be a discussion about how much cash you had that's going to last you for companies that were getting equity investors until their next round of financing. And now small businesses and entrepreneurs are doing it in this environment to say, how long can I hold out and wait through this crisis until I can get back to some new normal? So you need to know that, and a CFO can be in there and know what's that burn rate, what's my cash runway, and not just back of the envelope stuff. I'm talking analytical stuff. Really understand where we're being paid in 30 days on average pre-crisis. It suddenly went to 50. Well, that's a big impact on my cash flow. And that means I might have less time than I thought. And I need to factor that in. The money in the bank is never really the answer. And my question here is a rhetorical one, but it's also based upon an example. I have a client who's got $7 million in the bank, and everybody would go, wow, it's only 4 months of operating expenses. It's not enough. And I keep telling my client that, and we are in an initiative now, and fortunately for them, the COVID crisis hasn't hurt them that much. We're in an initiative now. By the end of the year, we hope to have 6 months worth of expenses, which has been a goal we put in place 18 months ago to get to. And we did not need to rely on it, but it has put us in a very comfortable position when this crisis hit in March and April, when I went straight to them after just 2 weeks of looking at the books and said, we've got nothing to worry about. We could lose all our business the rest of the year. We've got enough money to cover us. Because even though we had only 4 months, I knew if we started to make certain cuts, we would make that stretch out longer. So $7 million is not the number. It's how much of that can you make last in crisis mode? What is it like your rainy day fund? Just like any personal financial advisor will tell us what we need personally to have in the bank in an emergency fund, I believe every business owner, every entrepreneur should be having that in the bank today and be working towards that. It's one of the key lessons, I think, for most businesses out of this crisis, that they weren't there. I'm sure you've seen that too.
Yes. Yeah. And what this points out too, I think, is your earlier comment about understanding the relationships of the numbers in the business and the different aspects of the business, so that when you turn one dial, flip a switch, something changes, what's that impact going to be? Such as you described, with maybe a slowdown in collection of receivables, maybe we arrange for some other kind of financing, we can manage our cost, our personnel, but being able to see that we can take this effect, and it doesn't take, the effect does not show up overnight, understanding what time period that will show up and what that means to the overall strength and safety of the business.
And sometimes, Carter, a decision about whether I want to do those things, or maybe it's my own equity that I've taken out of the business over the years that I want to pull back because I believe in this business. But sometimes you look at it and you're saying, if you really want to be brutally honest, I'm not going to go back to where it was for a very long time. So do I want to put that investment in, or do I want to put that personal guarantee on the line for that bank loan increase?
Yes.
Because I'm looking at a very changed business and market right now. And if I can't make that pivot, I might need to reconsider what I'm doing here.
Yes. Again, it's looking out that front window where you're going versus making decisions because when we look in the back, everything's okay.
Right. Reason number 3, a CFO, as you know, in the 5th attribute of agile growth in the Gravitas world, could look at your company metrics, profitability, and then how do they optimize that cash flow? What are your drivers and your levers to control and increase your profit and cash? So your CFO should absolutely be the keeper of these KPIs, not the one who only solely develops them, because I think the organization needs to, as a management team, pull that together themselves, but certainly owns the actual tracking and reporting against them. And it should be a very simple dashboard: green, yellow, red. We should be not talking about the greens, worrying about the yellows, and focusing our efforts on the reds. What's wrong with this metric? Why is it red? And what do we got to do to turn it back to yellow and back on its way to green? And I think when you start to have a CFO who could put those kinds of things together for you, what you're doing is simplifying the way you manage the business, because you've determined already with your coach or your management team, these are the most important drivers. These are the things we're tracking. Our scorecard is going to tell us where we're at, and we're going to react to our scorecard.
And when you do that scorecard, how substantive are your discussions about those items on the scorecard?
Right.
Versus when you just start with financial statements or with all kinds of other reports? Do you spend as much time with the key numbers, or do you spend more time with the things that really matter to the business when you do this scorecard that you're describing?
Interesting thing about when I've gone through this process with clients who really buy into all of this, and we've done a lot of it, you wind up having very long financial statements on pieces of paper that only you and the controller ever look at, and you never really share with anybody, because what matters are these dashboards, KPIs, and the very top line numbers, and then your cash flow projections and your income statement projections for going forward. You're behind, and if you really are very good at it, you start to understand what's happened or happened already. June 30th is over. I can't do anything about January through June. I can only focus on now from July 9th through the end of the year. And how am I going to try to make this as best a year as I can make it?
Great advice.
So this is one I'm sure at your heart. CFO will develop a very strong relation with your CPA. Most people, and I'm sure you've seen this in 40 years of being a CPA, rely on your CPA to get that tax return, that legal regulatory document in, and tell me how much I'm going to pay. And let's also talk about how I can't pay that much that I paid this year, next year. But I think there's so much more you should be doing with your CPA, and the CFO can do that. They too have very, very broad experiences. They have seen hundreds, if not thousands, of businesses over the years, trends and what goes on in businesses, what worked well, what hasn't worked well. They have access to different kinds of networks of people, whether they be different lawyers, insurance brokers, other bankers, other lenders. They're part of the team, and as a CFO, I like to make them part of my team and have that relationship. The third point I think is a very, very important point. if you are thinking about business planning, if you're thinking about proper tax planning, you got to think about proper business planning. The two go hand in hand. And you should be knowing that ideally you're working with the same CPA who's doing both for you. I've seen situations where you don't, and it gets a little icky.
Yes.
Well, you got your personal CPA and you got your business CPA, and they're a little bit different. The other thing I'm sure you've been part of too, Carter, is that they're part of a team. If you're going to exit, if you've got an exit strategy 3-5 years down the road, you should be talking about that with your CPA, your partners, and some of your other stakeholders. And it's not something you decide and wake up today, I'm going to leave the business at the end of 6 months, particularly if you built yourself a 10, 20, $30 million business. Lots of considerations, not only financial, sometimes emotional, sometimes tax related, sometimes insurance related, but you need to do that. If you want to share it, and it varies with clients, but sometimes when I'm brought in to help understand the personal side of what's going on in someone's life and have the CPA be part of that discussion, I have found that it makes a more effective team. Every entrepreneur and business owner feels differently about it. Some like to keep close to the vest on what's going on personally. I leave that to be to them, but I do believe that there's a value add for another financial person at the table, particularly if they know what's going on in the business, and particularly if they know you very well, because they become your right-hand person. That CFO can add more value to them.
I agree with that. When we've had that happen over the years, it's always a much better. And sometimes having both sides there, you're discussing it, and I think you get a more balanced approach to managing the taxes. I think of it as the taxes, saving them are the icing on the cake versus the be all and end all. And you don't want to damage the business. So you have to do what's best economically, best for your business, but consider the taxes and how can we help there too. And that combination that you're describing with the CFO and the CPA makes for a much better value to the entrepreneur. Right.
And more than likely they come out with a better scenario, which again isn't always the best. It's not always financial. It's a very important piece of selling your business, but it's not always the main point of why you're getting out. And you can come out in a very, very different way, even though you got a whole lot of money and you're not happy about it.
Yes.
Because sometimes your exit is going to require you being around for a few years. And you need to be prepared for that, because you're no longer, you sold your business and now you're an employee after running your business for 25 years. You've got a whole different set of things you've got to think about.
Yeah.
And my final reason, and I brought this up a little bit earlier, but it's cool to say I'll check with my CFO. As I brought up earlier, I just think it's a very good deference action. Checking with someone else with authority buys you time. Also, and maybe you've played this role on the CPA side, but if I'm placed in between a negotiation, so you're the entrepreneur and you have to negotiate out something with your partner, your banker, a buyer, a seller, a vendor, you're always the person in charge as the entrepreneur and owner, but putting somebody in between you in the negotiation puts you in a different position of negotiation. So the hard discussions, the hard back and forths can happen with the CFO in between. That can allow for you to come in and either save the day after someone's playing bad cop, or go the reverse way. I've given it away too much, and maybe we even talked about me giving it away too much, and we was intentional about it, and you come in and say no, or I go back to you and I go back and say, I'm sorry, Carter won't go for that. We got to come back with a different solution. But I've been doing that intentionally because we wanted to get to a certain place of dialogue that wasn't happening in the past.
Yes.
That
the negotiations going.
Yeah, it does help. So just switching gears a little bit here, why you'd want to have the fractional CFO as opposed to a lot of things I just brought up was it's interchangeable. But if you're going to go for a fractional CFO, you get top tier expertise for less. So as I mentioned earlier, someone wanted to hire me a full-time basis, 25 years of CFO experience, 36 years altogether of business experience. It's a very, very big number, and often you can't afford that on a full-time salary basis. Or maybe you're going to give me a salary that we can agree to, but you're going to give it up in some sort of equity. But you're giving something up. With a fractional person, you can get some level of expertise that really is more than you can get on the full-time basis for less. You also have your cost savings, so you're not going to have an FTE on the books, a full-time employee. You're not going to have payroll taxes or benefit payments. You're able to pick your talent based on your needs. Maybe for the next 2 years, because you're in the startup mode, what you need is someone who's got a great amount of experience taking a company from 0 to 10 million. But once you're at 10 million, you need a different kind of CFO. If I'm your full-time person, I started with you. You don't want to fire me. I've been with you from the beginning. But if I'm your fractional person, we've got no contracts or commitments with any of our clients. We agree, I'm not the right person to take you from 10 to 30 million. We bring another person in, or you bring the other person in. Usually you have no additional comp beyond your fee. And when you have somebody in our role who is doing all the things that I mentioned, staying on top of all of the things that maybe you as an entrepreneur have just a toe in, but a fractional CFO, even on a day-a-week basis, or a day a month, depending upon the size of your business, he or she knows about all these things, is anticipating them, is bringing you to your attention issues that can get resolved before they turn into cannonballs about to hit you. You'll eliminate surprises and dramas. You'll have your business run a whole lot smoother.
I agree. It's much more flexible, and it brings a tremendous amount of knowledge and expertise that you would not otherwise have available to that business.
So as a follow-up for our presentation today, I put together basically it's a one-page checklist. Is my financial house in order or chaos? 10 questions to ask yourself. It's really to ask yourself and your finance team. And that will be available at that web link there. I am sure Gravitas Impact will follow up with an email that will summarize this event and give that to you again, but it's gravitasimpact.com/CFO. Download there, answer and look at those questions, bring them to your team, see if they've got those things in order. The last thing you want to have happen, and maybe you're having it happen now, I don't know about anybody out there in the audience, but we all know business owners who have this happen, is that crisis of the week that keeps popping up out of nowhere, which is all because there was proper planning or a lack of attention. You just have these things start biting you, and they suck energy from you every single week, day and week.
And that, I think, is your point about having that CFO, is to be ahead of those kinds of things and be ready for the what if. And then when the unexpected does occur, you are better positioned to understand what's occurring, to identify options, and then to determine what your actions are, what you're going to do to address it. So we have time for questions. At the moment, I don't see any questions here. But why don't you, Dominick, while we wait and see if people want to ask a couple questions, just tell us a little bit about what happens. So let's say that an entrepreneur has their bookkeeper, their controller, and now they want to step it up. What does that process look like frequently for the, what have you seen that look like with the entrepreneurs? When they're, you know, what kind of position are they in when they're saying, oh my God, I need something different? How do they know?
I think how they know is they feel like, to the big theme we've had here, Carter, and that I brought into this discussion was you keep looking in the rearview mirror and you're not looking at out through the windshield forward. So if that's really where you feel you're at, you feel you need to have that kind of expertise, I think your first step is you go out and you ask coach or other people in your trusted advisor world, your accountants, do you know a part-time CFO? Do you know a fractional CFO? Is anybody out there? And I urge people to interview several different people, because there's nothing more important in this relationship between the entrepreneur and their part-time CFO than that chemistry. That person has to really work well. And then the second thing that has to happen is you need to build trust. You need to know that you could trust this person. There are certain clients, it's funny, over the years, I've just stepped back and said, I've barely known them a month and I already have access to every single bank account. You know, they were just so eager to get it off their plate that I thought from an internal control standpoint, they were just making a big mistake. And it is, you know, it's more expeditious to turn it all over and just say, listen, I don't want to do anything with it. You're hired, you go do it. But you do also need to factor in and say, all right, let me be smart about certain things. I just met this person. So, but the other part, Carter, that I would come up with after you do your interviews and you find your person is lay out your game plan about what you want. They're going to come up with what they think is going to happen naturally, because they're going to just bring a lot of energy, a lot of fresh thoughts. They're going to come in 90 days. And I say, if you give them 90 days, you'll see a difference. But also say what you want out of this. Where do you want this to go? Is it more about where you want this relief because it's all on your back? Is it more about, I need you to start driving these things and help me with this team get to this level that we can't seem to get to? That will help the CFO a lot, for you to help guide their engagement with you so they know more about what you're looking to gain out of it.
I agree. And as you said, it's kind of an interview. You're looking to see if the chemistry's there, the communication. I think your point about what do you want out of it, another way of putting that might be, let's define success. You know, when we sit down with each other in 90 days, how are we going, you know, what has to happen for you to look me in the eye and say, this was really a good decision for me. I'm so glad I did it. Maybe also talk about, well, then what about 6 or 9 months? Being able to do that, because what you accomplish in the first 30 days with someone like Dominick and the A team, and then what occurs over 90 days and 6 months is going to be different. And you're going to want to see that progression. And it's very, very important that you have developed a shared understanding of the expectations.
The other thing, Carter, is it's particularly if you're looking and your need might be 1 day a week, it is not an inexpensive decision. So you need to say, how do I make this decision and know I'm doing the right thing with this person after maybe you did a month of interviews, you met them 3 or 4 different times. You know, maybe in the old times, but pre-pandemic, you had gone out to lunch or grabbed a drink with them or whatever. But one of the ways I've recommended to get over that beginning trust issue is, let's make a very discrete project. I want to work with you. You need your part-time CFO. Before we even get into that marriage, what little dating thing can we do together?
Yes.
Maybe it's, can you just develop that cash flow projections? Jim has been doing it for me. I never get it accurate. I never get it on time. Can you fix that? That's the discrete project I need to see you do over the next 30 days. That will tell you a lot about how that person not only works with you, but your team. And when those two things come together, you'll get to know about, hey, is this dating thing working well enough that we want to take it to the next level?
Yes. Yeah, that is along the lines of Jim Collins talking about shooting bullets before we shoot cannonballs.
Yes, good analogy.
Right?
Yep.
Yeah, it's a big decision that you're describing, and it's a huge role. The CFO role that you and the A team play for businesses is transformational for those businesses, and so important. And having that good, strong CFO there who is helping you use the past information to guide decisions today that are going to create your future.
I'd like to just bring up, since we have the time here, one other way you can use an outsourced accounting firm like ours. And there are many out there. Let's just say you've got an inadequate whole team and you're not that large yet, that you have the staff accountants or clerks, bookkeepers, and the controller. But you know whatever's working with the couple of people who are doing it aren't working. you can outsource your entire department to a team like ours. And there's many others out there across the country. So you could look at a solution that says, I'm going to go remote and virtual on this whole thing. I'm going to have a whole team, and I'm going to have, Dominick will layer in a team that brings in staff accountants who work remotely. And my team, I now have 3 people in my organization working on it, just the same way you or a law firm would have a very low associate, a junior partner, and a partner working on an engagement. And we do that, and that often brings down your total investment because I don't have to spend as much time working with that. So it's an alternative for the right kind of company. If you're a $20 million company already and you've got a couple of infrastructure, 4 or 5 people already in your team, you're beyond that. But if you got 1 or 2, or maybe one and a part-time person, but you're growing fast, you could see your trajectory is going to take you, need to expand that finance department in the next 6 months, totally outsourcing your department is an option out there. And it works. In the right scenarios, it works.
It does. It also helps the entrepreneur not have all their eggs in one basket and not have to do the interviewing and the supervision and the management of those people.
Yep.
So it can allow them to focus on what they do well and what the rest of their team does very well, and know that the finance side is being taken care of by the A team.
Now,
or another firm like yours.
There are businesses, Carter, that we've seen, and I would advise when I see certain aspects of their financial functions that require somebody to be on staff.
Yes.
Now, manufacturing company, I think, is a very good example of that. Very heavy on inventory, cost accounting. You might have a more complex process. It doesn't work as well there that it does with professional services or services-related kind of companies.
Yeah, good point. Well, we still don't have any questions.
Maybe
any other points you want to make, Dominick?
No, I'd be happy to, wrap it up. I've enjoyed this. No other points that I have, Carter.
All right. Well, Dominick, thank you. Really appreciate your joining us today. Appreciate our participants attending, and hope that you got some good information from this. I think you did a great job with it, Dominick, and you have quite a team there with your A team. So thank you.
Thank you, Carter, and you be well, and we'll see you soon.
All right. Thank you, everybody. Bye.